Hello and welcome to Market Matters presented by MIAX. I'm Joe Teague. Maybe joining me soon will be Brian Stutland, my partner in crime, as usual. Well, right now it is just me as Brian's battling the dreaded COVID. I'm happy to be here, really excited to get into it. Last week we had a ton of news out there. We had the inflation data, we had the Fed speak, and really we had Powell declaring victory over inflation. So it was a fascinating week last week. We saw volatility suppressed in a big way. Is it going to come back? We talked about how next year is projected to be higher volatility than this year. We'll wait and see how it plays out. It should be another interesting week. Let's get through it. Again, today we're going to be talking about the week ahead. We're going to be talking about the inflation, the inflows, and the rotation that's been going on lately. We're going to trade KRE, the regional banking index. We're going to trade Nike earnings. We're going to do a recap of our Costco trade last week. What a great trade that turned out to be for me. Fantastic on that. And we're going to go into some options 101. Stick around for all of it. We're going to be talking about cash secured puts in the options 101. So really excited for all of that. Let's jump right into it. The week ahead, we had a lot of economic data last week. Not as much going on this week. That's to say the least. Some interesting home sales data going on. The personal spending, PCE on Friday should be, moderately interesting. Consumer sentiment, moderately interesting. And of course, we got the GDP coming in on Thursday. That is always something that I like to look out for. I mentioned we're trading Nike today. They have earnings coming on, so that'll be an exciting one on Thursday. Happy to see that. Hopefully I can continue my streak here, my earnings plays. Looking forward to that. Not a whole lot going on besides Nike out there this earnings. We're coming up to the end of the year. Not a ton of companies have earnings this week, so it's pretty bare there. And we love to talk about this AA2 consumer sentiment survey. I find it fascinating. It's really a really good contrarian indicator. And look at this 19.3% bearish. That is a 6-year low. That is very low. And that's pretty concerning if I'm a bull right now. 51.3 bullish. That's close to the 52-week high there. So and a huge spread between the bull and the bear. So this is a spot for me. A lot of caution right now. Options are very cheap. It's a spot where I'd be looking at selectively putting on some protection trades for myself, for my clients, just looking out there saying, hey, the sentiment is extra bullish. We always talk about the max pain. The max pain right now would be something to the downside. So let's talk about the inflows and the rotation out there. So the amazing thing should not be a big surprise. We're seeing record inflows into money market funds right now. So it's a ton of money, not on the sidelines, but just out there earning that 5%, that 4.5% free cash right now, which is being offered to them by banks looking to hoard money on their balance sheets. So there's really good time to be in cash. Now, a lot of people are saying, what's going to happen next year as interest rates come down? These money market funds are yielding less. Is this going to mean more money is going to be piling into stocks out there? Well, another thing out there that does well when interest rates come down are the small caps. And let's just take a look seasonally how small caps tend to do. They really outperform here at the end of the year. This December 15th through January timeframe, really is mid-January. Is a really strong time for the small caps out there. And it really is fascinating to see this divide and really interesting to see where we are with these small caps. I'm surprised by this too, but for whatever reason, the end of the year, this really is a bullish time for these small cap stocks. And I don't know if you're aware of this, but in the Russell 2000, almost 20% of it is made up of regional banks. So looking at that, thinking about how, the Russell's poised to do something good here. The regional banks are going to benefit if interest rates are falling here. So it's really fascinating to me. Maybe just a theme for 2024, at least the start of 2024, as people are positioning themselves for interest rates falling, is just looking at cautiously playing the regional banking index. And we're going to do this with a cash secured put. So just looking at this index, wow, it's had a fantastic run in the past couple of weeks. we had this head and cup and handle type of formation here. A really great breakout here above this $48, $47 level, and just skyrocketing here. And now we're kind of pulling off, kind of unsure of what the next move is going to be here. And this is a situation for me when a stock has had a big run higher, the upside might be a little bit limited. Volatility levels, are a little higher than usual in this area. That's an area for me where I'd like to look at stock replacement cash covered put. I'm just gonna look at the Jan 51 put at $1.10 here in the regional banking index. I'm gonna collect, it's almost 2% for about a month to be here waiting in here. So for me, that's a really nice return here, and I'd like to shoot it over to Brian Stutland. He's going to come in here like Michael Jordan off the bench, coming in playing sick today. Put up a double nickel.
Hey, money never sleeps, right, Joe? I once heard that on a great movie one time.
Yeah, thanks for that. This is actually your trade. Talk me through this real quick. This cash covered put. We're looking at the Jan 51 for $1.10.
Yeah, when we're looking at the regional banks, I saw the chart you brought up there, and that's exactly what's going on. Is as soon as we've seen the interest rates lower, we saw that breakout in the regional bank sector. Now, the regional banks as a whole, if you took that chart and went even further back, they struggle a little bit for a long-term investment strategy. It hasn't been the best play. The regionals have actually kind of been a drag, so to speak, on total return. If you looked at comparison to the S&P or other areas, the Russell 2000, other parts of the sector, regionals have kind of lagged. So here's a trade. It looks bullish now, so I'm comfortable selling a put, owning the stock down, the break even, just below that $50 level. That's an area that I'm okay owning the stock, and collect 2% in basically what's a month worth of time. To me, the premium is there for the risk reward to add some premium, collect some income on my portfolio.
Yeah, and it makes a lot of sense with the interest rates falling. Regional banks are doing pretty well. I think next year we're going to have a little bit of the buy the rumor, sell the news type of trade with the regional banks. They're going to do well up until that drop in the interest rates. So the market's going to be ahead of that, and maybe around the March to May period we'll see some consolidation there. So I like that from that perspective. I also like it. I was talking about earlier, a lot of money has been going into money market funds, a lot of inflows into money market funds. People are saying that's going to be a great reason for a rally to happen in 2024. For me, instead of being in money market funds, I think this is an interesting spot to be. I think my money market funds won't do as well if interest rates fall, and the regional banks will do just fine. So let's move it on. We got earnings this week, Brian. We're talking about Nike earnings. Tiger Woods may or may not be back in the fold for Nike. For me, maybe that's a sign of strength for Nike. They don't necessarily need them, but I think Nike looks a little bit like the regional banking index, a lot like a lot of the small cap stocks out there. And it's really a company that didn't really have the best year this year, a decent enough year, but didn't break out like some of the big mega cap tech names. But I think it's a company that could benefit as long as the economy stays strong and the consumer stays healthy, and these interest rates falling. It's going to be a double winner for them because they have their prices coming in aren't increasing as much, but they're still able to charge high prices. So looking at their charts, it's another cup and handle type formation. This one hasn't broken out like the regional banks have. So I just be looking out there, and I'm actually going to do an earnings calendar where I'm kind of bullish for the long term. I'm kind of going to look to sell the earnings volatility, and I'm going to sell the Jan 125 call, buy the March 125 call. I'm expecting a nice year out of Nike. By doing this calendar, I'm only going to pay $1.92. That March 125 call is about $5. So I got a lot cheaper way to get into that 125 call. And I'm just expecting a moderate move after earnings and then a nice run through March. Brian, what do you think of my Nike earnings play?
Well, I mean, we've made a lot of nice calls so far on earnings plays. We haven't really done a trade that's what's a call calendar time spread. So this is sort of a new trade for folks to sort of listen in and take in. If I'm looking at this, basically what needs to happen is I want to see the stock stay below that 125 level through January, because then that call bakes off and goes out worthless. Now I've lowered the outlay cost of buying the March 125 call. So now I still then have the upside over there. So when you make this kind of play, especially heading into earnings, you got to be a little careful because it's a catalyst event. Could it blow through that 125 level? Maybe. But you look at the charts, I think there's a little bit of drag going on with Nike in terms of it's got a bit of a China play to it. And we've seen how much that economy has struggled lately. So it may struggle to get through that 125. I think, Joe, that's why you're probably selling that near dated call to lower the cost of playing March further on into the end of the first quarter into next year, and see how that goes. So I do like that play and sort of lowering your cost. That's how a time spread works, is basically you want things to sort of settle in after the earnings event to happen, not blow through those strikes. So you got to pick a strike that you don't think the stock is going through.
That's exactly right. Yeah, I'm just seeing this this resistance here. I think that'll be tough for it to jump through on earnings. Now, if it does, it won't be a total catastrophe because I'm of course covered. I have the March call here, but I do think volatility is a little bit higher into this event. If we get a small run up, a small move higher, it's going to be a nice winner. I'm going to look to take off that Jan call after earnings and then let the stock appreciate higher is kind of my goal here. It's another way to just get into that March call a little bit cheaper instead of selling an upside call. I want to sell the calendar shorter duration, so I can take that off after earnings, let the volatility come in, and then being at the 125 strike just a little bit cheaper. And let's move into the question of the day. And if you have any questions out there, feel free to bring it in. But I thought it might be a good time for the question of the day to talk about Costco from last week. So Costco last week, we did an earnings play. We did the quarterly 625, 650 call spread. We were talking about how strong it had looked, how crazy it might seem to just want to jump in here and buy that stock. And for me, yes, that probably was just with regular stock, just to go out there for myself to buy that. But it was a lot more palatable to do so with options. This was a trade we put on. We did the 625, 650 quarterly call spread for 860, pretty much a 3-to-1 payout there, turning right into that $25 for me. So it was much easier to get into the name there rather than putting $650 at risk. I can only put $8.60 at risk. So that was easier for me, and I'm just really happy for that. And
Joe, do you still like Costco? Do you still what's your view going forward here now with the stock?
Well, I love Costco. I go frequently, and I'm just amazed at the traffic they have there. I'm amazed at the random things that it gets me to buy or people to buy. Every time I'm in there, there's a wait to check out. People are buying televisions.
What's your go-to item when you shop there with Costco with your family of 5?
They have a $6 rotisserie chicken, which is, better than any other rotisserie chicken that you get out there and cheaper.
Okay.
So that's go-to. And just, I get the, the chicken, get like a 4.5 pounds of chicken for $25 or whatever we need. I usually get the protein there because it's a good price.
Yeah. So this was a nice winning trade. Costco, obviously, this touches back on the consumer. Nike, earlier in the year, we tried to kind of stay away from consumer discretionary as rates were rising. I think now that rates are sort of settling in, the Fed kind of signal, it's go time here. We've sort of started taking money out of the M2 money supply, or at least not growing it as fast as we once were. And now the consumer can kind of play some catch up here. And I think we'll start to see consumer stocks, start to get back in the game and appreciate with the rest of the market.
Yeah, and absolutely. So let's quick little update to my trade. It's 100% of the money. There's no point in holding it anymore. I want to get a little bit more juice in Costco here. So I'm actually going to do a stock replacement trade, a cash secured put. Stay tuned. Going to get into the options 101 on this in just a minute, but I'm going to look to sell the Feb 650 put for $8.80. Going back to my previous trade, I paid $8.60 for that call spread, so I'm going to be collecting more than I paid. So Right now, it'll be essentially getting that $25 for free if we stay above 650. And again, I'll get into why and times that I like this trade, but usually it's times we've seen a nice run up, a quick run up in a stock with higher than usual volatility. Costco still after earnings, there still is some volatility left to bake off on that trade right here. So I'm happy to do so, and also super happy to buy Costco should it fall below 650. Okay, let's get into it. Options 101. I teased it. I think you know what's going to go on here. This is going to be the JOE version of Options 101. Options 101, what is a cash secured put? Well, we know owning stock has a traditional risk reward. For every $1 it goes up, you make $1. For every $1 it goes down, you lose $1. It's a 1-to-1 game. But what if there was a way we can mitigate some of that risk? Well, enter the cash secured put. And if the stock falls, when you sell a cash secured put, if the stock falls, you're actually buoyed by whatever premium, whatever options you collect by selling that put. Now, if it goes below your stock price, you'll still start losing money, but you'll lose a little bit less money than just owning the stock outright. Now, there is a trade-off for this, of course. There's a point when you don't make any more money. There is a cutoff for the amount of profits you can gain. You can see by this chart, it's limited to the amount of money you collect on the put sale. So that's the trade-off for the strategy, and there really is a good time to do the strategy. So the timing for me is when I'm looking for stocks that have limited upside potential, stocks that have had a really fresh recent run-up, or really into steep resistance. So that's one spot for me. And the other spot is stocks that have really high volatilities, which mean the premiums I'm collecting are a lot higher. So I'm actually looking for both those things together. Typically, when I'm looking for a cash secured put, if I can do that, then I'd be happy. And it often can be better than owning the stock. So that's when I look for a cash secured put.
Well, that's a great little option strategy to learn. That kind of, caps off of what we talked about with the regional banks. So hopefully people take note of that and learn how we put our trades on here at Equity Armor Investments. This is Brian Stutland, Joe Teague. We put on a great show. I came in a little bit late, almost as a guest speaker here, feeling a little bit under the weather, but we got to push through it here. The market keeps going, so should be an interesting week, as Joe outlined in stocks, and we look forward to bringing you more information next week. This is Brian Stutland, Equity Armor Investments. Like I said, my colleague Joe Teague, brought to you here by Market Matters and the MIAX. Thank you for the sponsorship on this. Love you. See you next week.